Welcome to the Knakal News Network. The Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Elisa Berlin, Director of Sales at Massey Knakal Realty Services, and welcome to the Knakal News Network. Today, I'm here with Bob Knakal, Chairman and Founding Partner of Massey Knakal. How is the Manhattan market performing in 2013?
Well, actually, to understand how we're doing this year, Elisa, we need to take a look at how we did last year, because last year was an unbelievable year in the Manhattan submarket, mainly because of the capital gains. In fact, in Manhattan last year, there was $31.4 billion in sales, which is the third highest total Manhattan has seen. In 2007, we had $52.5 billion in sales. In 2006, it was $34.8 billion. So we had a tremendous year in terms of dollar volume. In terms of the number of buildings that were sold last year, in the Manhattan submarket, we had 1,194 properties sold. That was an all-time record. That's 4.2% of the 27,600 buildings that exist in Manhattan south of 96th Street. And so that turnover ratio of the total stock was 4.2%, the highest it has ever been. And that eclipsed the previous high, which occurred in 1998. And if we look at the number of buildings sold, so far through the first 3 quarters, we've only had 516 buildings sell, which if annualized would be about 688 for the year. And even that's running at about 42% below where we were last year.
But pricing seems to continue to only go up, because although volume is down, I feel like people are chasing to find product to buy. I
think that that there are several ways to look at what's happening with value now. And is it a good time to sell? As a broker, it sounds self-serving for me to say it is a good time to sell, but actually values in the Manhattan submarket have increased 50% since 2010. And that's just a remarkable increase. In fact, today, the average price per square foot of a property selling in Manhattan is $990.
Do you feel that a lot of these sales that are occurring at record prices are because they just need to park their money somewhere and they feel like Manhattan real estate is the safest place to be?
Well, I think safety and flight to quality is certainly part of the equation. We see foreign investors that are looking mainly at asset preservation. They're not that concerned with yield. They mostly want to know they'll be able to get their money back when they want it back by selling the property. In summary, while Manhattan has typically led the way amongst all submarkets, it is lagging this year based upon tremendous increases in value that are increasingly driving investors to the outer boroughs. Number of properties sold in the first 3 quarters was 516, and that is a whopping 42% below last year's pace. Constrained supply and increasing values are reasons why investors are getting increasingly frustrated with their opportunities in the Manhattan submarket.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.